People will not be able to handle any bad news because of the conditioning of the mainstream media. Welcome back to the channel, everybody. I am Mick Alfany. This is an article from philstockworld.com and it's titled, JP Morgan Analysts Worry U.S. Investors Have Gotten So Confident About a Soft Landing, I wonder why, that they won't be able to handle bad news. And this is one of the problems with the conditioning of mainstream media constantly being a mouthpiece for government officials who say, oh, nothing's wrong. Like I said before in yesterday's video, they don't want to be seen as bad guys. They don't want to take the blame. So they pass the ball or they mislead the people quite often, which a lot of the people that watch the news, they're hoping for truth. I get that. But because of that, they've been told, and I've seen this as well in articles, hey, there's going to be a soft landing. There's no problem. Everything's going well. The banks are doing well. The economy is doing well. According to mainstream media, everything's doing well. It's unbelievable. You know, even as video after video and article after article from everyday citizens comes out talking about how they can't find any jobs, even though everyone claims there's so many jobs out there. They can't find any jobs, right? Apparently, this is what they're saying, folks. This is what I'm hearing. They can barely afford appropriate food levels. This is what they're saying as well. I know you see the articles as well. Mortgages are too high. They can't buy apartments. They're too expensive. They can't buy houses. They're too expensive. But the mainstream media says, no, everything's fine. So let's circle back around to this soft landing discussion. Obviously, there's a lot of struggle going on. I've been saying it for about a year and a half now that we're in a depression. We're in a depression. They declared technical recession quite some time ago. Then they tried to change the definition of what a recession is. Of course, that's been a theme, changing things, right? For quite some time now. But yes, so it puts the regular people in a position where if they're not wise, if they're not taking precautionary measures, they could be blindsided. They're not ready for anything that could be bad news, like the crash landing that probably is going to come. You know, a lot of banks will probably go belly up. They will probably collapse. You know, commercial real estate, that guillotine is still hanging over their heads. I don't think the housing issue is going to be solved anytime soon. There's going to be a lot of battling over jobs, especially now as they're going to continue to raise interest rates. I don't think they have any choice, but we'll see what happens if they decide to change. But if they keep raising interest rates, then even more jobs are going to be lost. I've heard a lot and read a lot of articles about people being laid off, right? You know, you saw a couple of companies actually go bankrupt. There's a tsunami of bankruptcies that are going to continue to happen, right? You saw what happened with Yellow Trucking. I mean, there's so much going on. You see all the banks closing all of their different branches, of course. That's jobs that are going to be negated. Of course, they're not going to hire the same amount of people to work for a digital service. And then also on top of that, they can probably split that in half and just give half of that workload to artificial intelligence, since there's so many advanced artificial intelligence programs now that can run entire advanced websites, and they're highly customizable, right? So you have that as well. So no, yeah, I agree with JP Morgan. And another thing, you got to be, I mean, when JP Morgan is worried about something, then you know there's trouble, because they typically are not the worrying kind. Right. So now let's move on here, because we have a lot of activity going on with the BRICS nation. This article here is from kitco.com. It's titled BRICS nations may be stockpiling gold to support new currency. Well, we've always known they've been trying to work on this new currency behind the scenes. And we've heard a lot of talk about it over the years, which has been moving forward because of the rapid advancement of distributed ledger technologies of all kinds, blockchain, hashgraph, etc. But they've shifted focus because I don't think they want the West looking directly at that project, whatever they're going to call that, the BRICS nations one currency. That's not what's at the crux of what they're discussing now, which is trading in local currencies, which they always sort of paralleled the talks about the one BRICS currency with the trading in local currencies, which you've seen the uptick in that. You know, you've seen a lot of countries transacting in Chinese yuan, renminbi. You've seen them do currency swaps in order to pay debt, right? Massive currency swaps. You've seen them pay off certain debts instead of US dollars. India used, I forgot my apologies. I forget the name of the currency in India, but they used their local currency to pay off certain debts, whereas opposed to the past, most of these countries would have used the US dollar. Also, you've seen a ton of dollar dumping, correct? All right, so let's read this little tidbit. It says China and Russia may be setting aside some of their massive gold production to support a new currency to rival the US dollar, according to Daniel McCarthy, strategist at dailyfx.com. Now, listen, I know a lot of people in the US, they don't want to hear something like that. They don't want to think anything can rival the US dollar or surpass it. And I always posit this, that's not what I think those nations would aim for. I don't think that they would aim at equaling the dollar or being better than the dollar. No, I think what they would aim at is just greatly diminishing the dollar, because, I mean, the U.S. itself is greatly diminishing the dollar day by day. The dollar's purchasing power is so low. It's unbelievable. If you check the historical charts at how much value the dollar is losing, then you understand why a lot of people have gone into gold and silver, even platinum, palladium, things like that, or fine art, to preserve their value into something that is going to work for them. So along with the U.S. diminishing the dollar, I think that it's sort of like one fighter's already hitting the dollar with body blows, right? And I think the rest of the BRICS nations are saying, hey, why don't we just jump in and jump it, right? Let's jump in and start throwing some punches as well and diminish it some more. So it's not about the dollar going to zero or completely surpassing the dollar. I think it's more so they want to injure the dollar to where you bring it down to a more humble status, if you will, so that they can play. What they've been saying is they want a multipolar world, correct? So you would have to bring the US dollar down to your playing field, a level playing field. It says, quote, the gold price continues to oscillate around US $1,940 going into Tuesday's trading session, as market headwinds might be offset by geopolitical factors that have seen volatility in the precious metals slide lower, unquote, McCarthy said. He noted that real yields on US 10-year treasuries recently hit a 14-year peak at above 1.90%. Quote, the last time real yields were this high was 2009, when spot gold was below US $1,000, unquote, McCarthy said. And here's another quote. It says, quote, more recently in 2018, when the real yield was near 1.0%, spot gold was under $1,300 an ounce. So now let's move on here, see what's going on with mortgages, right? This is from mortgagenewsdaily.com, and it is titled, Mortgage Rates Jump Higher. It's so crazy. We were just talking the other day about, in the last video, about mortgage rates had come down a little bit, but they were still high in comparison to to last year. And now they're back up again. Holy smokes. It says mortgage rates are noticeably higher to start the new week for most lenders, although some lenders increased their costs nearly as much on Friday. Between the two business days, banks were closed on Monday, of course. The average lender is up between 0.12% and 0.25% from Thursday afternoon. Rates are sometimes pushed higher by big, obvious events and economic reports. Other times, the motivations are more subtle, elusive, and even non-existent. Today's motivations were definitely not obvious at first glance. Even now, it's sort of like finding forensic evidence to piece together a mysterious crime. We have a few good leads, but nothing conclusive and satisfying. The best leads have to do with arcane bond market happenings, such as corporate bond issuance, big corporations issuing bonds, which sap of the buying demand from other bonds, thus pushing rates higher across the board, among other things. All right, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, folks, let's get to the money.